Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Monday, April 20th, 2020. We're in the first day of the new trading week, and we're in the last hour of the trading day. I mention this each day, but I think it is worth repeating. In my opinion, at least for me, the best time to make the majority of my buying and selling decisions is right at the end of the day, right before the market closes. I say this because during the day, you have the day traders and you have the algorithms. They're the ones that are controlling the price. I consider it more noise than anything. At the end of the day, the large financial institutions come in, they wake up, they start making their decisions at the end of the day. They're the most well capitalized. They have the best information. They're dealing with the best technology. They have very, very smart people. And they start making their decisions at the end of the day. And they take the pricing control away from the day traders and the algorithm. So I like to piggyback the majority of my buying and selling decisions off of them. That being said, sometimes I do take a trade during the middle of the day if I have a good setup, and I will definitely show you one of the trades that I did today. Unbelievable trade, unbelievably good, and then bad, and it turned out it was just a totally break-even trade, but it was disappointing, and I'll show it to you. But anyway, thank you so much for coming today. It is a wild day in the market. My goodness, it is just wild, but we'll get to that. But thanks for coming. I hope you had a good weekend. I hope you had a safe weekend. I always look forward to seeing everybody. I think we have such a great group. We have a lot of good input. We have good comments, analysis, and just generally really nice people. So I always look forward to seeing you, and thank you so much for spending your time here, and I hope it's helping. I hope the time you're spending, you're getting some kind of return in learning some good trading principles with your investing and with your trading. So let's take a look. Hey, Wade is here. Good to see you, Wade. Thank you for coming by. Hey to you. David is here. Hey, Dave. Nice to see you, my friend. Scatty13. Hello, all. Hello, Scatty. Thank you for coming by. Kamal. Hey, bud. Good to see you, my friend. Brian Lopez. Hey, Greg and all. Hello, Brian. Nice to see you. Miko25, good afternoon, everyone. Good afternoon to you, Miko. Thank you for coming. I appreciate it. Hey, Steve Burns. Good to see you, my friend. Always an honor and a privilege to have Steve here. I mean, it really is, with all of his books and courses and input. And I just think it's wonderful to have Steve here in the chat with us each day, to be able to rub shoulders with Steve and all his wisdom and knowledge. So thank you, Steve. Steve says, my favorite quote of the day is from Kamal: negative interest rates, negative oil. Interesting. Nice going, Kamal. Yeah, oil has been wildly crazy, and I was in a little bit of it. As it turns out, I had a total break-even trade, but I'll show you. You'll feel my pain. Zach is here. Hey, Zach, good to see you, my friend. Appreciate you being here. Frank is here. Hey, oil's well that ends well. Oil is just insane today. No doubt about it. Steve says, traders will pay you $22 to take May oil futures contracts from them. Yeah, this is crazy. Everything is inverted. It's just nuts. I mean, I saw a post from Steve, saying that I can't remember if they're June futures or December futures. I can't remember now, but I think it's up at like $37. So, if you had oil right now, right this second, you just had a tanker offshore, you could lock in right now and people would pay you, I think it's like $37 a barrel. So, if you could buy up some oil now, but the problem is you have to store it. And that is why there's a lot of oil tankers out there on the ocean, just drifting around with oil, because they have a guaranteed price that they can deliver it for, but of course they have an expense of storing that oil. And I think those super tankers cost about $100,000 a day, if I'm not mistaken, but I guess they've penciled out the numbers. I remember somebody was saying that one of their favorite trades was buying these oil tanking companies because of all the demand they would have from storing oil. So don't know if that's true or not, but it does kind of make sense. Frank says, total dumping on oil. Yes, sir. 100%. Marco, good to see you, my friend. Appreciate you being here. Hope you're having a nice evening in Slovenia. Steve says oil contracts contango is highest of all time. I would imagine so. Well, the market is just melting down here. Let's take a look. Dow Jones down 612 points, down 2.5%. NASDAQ down 94 points, down 1%. S&P down 53 points, down 1.85%. So we're having a bit of a breather, having a bit of a pullback. If you want to call 600 points on the Dow a pullback. Unfortunately, we're so acclimatized to these numbers that seems like bigger than usual down day. Okay, here's the plan for today. First of all, we're going to run the U.S. legal disclaimer. Secondly, we're going to come back, take a look at my current positions, talk about when I bought them, why I bought them, what my methodology was, what my system was, what the trade was, and then lastly, how I'm going to manage them going forward, either to the upside or to the downside. After that, some of you have been kind enough to share your trades with me. I'm going to be going over those and see how those are doing. After that, we're going to do a few minutes on trader psychology, some good sayings on trader psychology, or some good trading words of wisdom. I think it's very important to learn these things, hear these good sayings, because they're around, and these sayings have been around for a long time because they are true. So we're going to talk about that. After that, we're going to go down through my watch list one by one. I have 3 requirements when it comes for me to take any trade. Number 1, I have to have a good confluence or combination of indicators, or in other words, groups of buyers. I look at indicators as potential groups of buyers. You're going to improve your chances to have a profitable trade immensely if you can have as many other buyers around you as possible. That is why I look for a confluence or combination of indicators like MACD or RSI or moving averages lining up. I look at those as groups of buyers, and ideally not just lining up on one time frame, but on 2 time frames. So that's requirement number 1. Requirement number 2, have to make sure I have a good risk to reward. This to me is very, very important. You can have a nice confluence of indicators, but it may be at a certain RSI level or ATR channel level where if you're like me, you have some filters. You say, well, it is a setup, but in the way that I trade with my filters, it may be a little too high here. And sometimes that's going to work for you. It's going to save you a lot of money. Sometimes it's going to work against you. You won't take the trade and you will miss out on a lot of money, which I have been experiencing over the last 2 weeks. But that's how it goes. These things tend to even out. One thing I would say is, if you say, hey, listen, I have a filter on this trade, it's too high, and then you don't buy it, and then it goes higher. Next time it happens, stick with your plan again. Just don't, it's called recency bias. It means that if something happened in the past, it's probably in the recent past, it's probably going to happen again. And that's not the case. My best advice is to have a plan, stick with it. Just realize sometimes it's going to go your way. Sometimes it is not, but stay consistent. And then thirdly, make sure you do not have too many correlated positions. Stocks tend to go up and down on the same day, especially if they're in the same industry. So make sure you have some diversification. Have diversification in different industries. Maybe step outside of equities, have some oil, have some bonds, have some gold or silver. It's very important to be diversified in your holdings, and it's also important to be diversified in your trading approaches so you can smooth things out. So I'm going to go down through the watch list. I'm going to take a look. If anything, if anything looks good on first pass, I'll go ahead and check it off at the end. If I have 3, 4, 5 potential candidates for the end of the day, I'll go through with a real fine-tooth comb, look at multiple time frames, look at risk to reward, and if something qualifies, I'll go ahead and try to buy it just in the last few minutes of the day. And then after the market closes, if you have any questions for me, please let me know. I'm happy to answer them. If you need some clarification, please let me know. Happy to clarify. If you'd like me to take a look at some stock symbols, I'm happy to do that, give you my humble opinion on them. If you have any stock symbols that you would like to get my opinion on before the market closes and you think it'd be helpful for you or the group, please let me know. Please put a star by it so I know it's time sensitive. So, all right, well, that is that. That's going to be the plan. So if you could be so kind, hold on for about 40 seconds. Going to run that U.S. legal disclaimer, and I will be back in shortly. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. Okay. Kamal says, this is scary for regular human life. I don't want to go back to the caves. Yeah, if oil goes away, is that what you're talking about, Kamal? I think that's what we're talking about. Frank says, we are living in history, Greg and Steve. Yes, my gosh, these last few weeks has been unbelievable. To the upside, to the downside, to the upside, oil. I mean, it's crazy. It's a very good point, Frank. We really are living through history. And I'm really glad that I've been able to, kind of put this all in history each day. Maybe one day when I'm old and gray, well, I'm kind of already old and gray, but when I'm older and grayer, I can look back, watch a few of these podcasts and go, oh my gosh, right? Mount Doji, hey everybody, what's going on? Mount Doji had some puts on oil. Nice going, buddy. Nice going. All right, well, let's get to it. All right, bright spot in the day is Adobe. I did take Adobe on Friday when the 10 EMA crossed over the 50 EMA. This is a good back-tested approach, a good back-tested crossover approach. When the 10 crosses over the 50, doesn't always win, probably loses more times than it's going to win, but with crossover, the nice thing about the structure of a crossover is that generally you're going to lose pretty small, and every once in a while you're going to have a really big outsized gain. And that's the key to profitable trading, having larger winners than your losses. But you have to have some kind of structure. You have to have some kind of line in the sand. So my line in the sand on this particular trade, you can see the 5 crossed over the 50. If the price closes below both the 10 and the 50, if the price closes below both the 10 and the 50, my rules, I get out of half my position. If the 10, I keep saying 5, if the price closes below the 10 and the 50, I will get out of half my position. If the 10 crosses below the 50, on a formal basis, not price, but the 10 actually closes under 50, that will be my signal to get out of the other half of the position. To the upside, I will phase out as it goes my way. If it rejects a 70 RSI, I will go ahead and lock in profits. It's up today, 0.45%, did not hit a profit target, but pretty strong to be up on a down day like today when we're down 567 points. So anyway, grateful for that, but that's the plan on Adobe. Apple down today. I do not have just a directional equity position. I do have a long-term put way down here. When I bought them, I figured that, listen, out to June 18th of 2021 will probably give us some time to get past this issue that we're having. If I lose, well, I lose a defined amount. I do still have a stop on this. My stop is, this is on the weekly. If we close below halfway of this washout bar, that will be my stop. My profit target to the upside is if we reject the 1 ATR channel on Apple, that will be my place to take profits. The calls I have are June 18th, 2021 at $250. Right now it's $278. So up about $28 since from my strike price. So it's in the money. The trade is profitable. It's been a good trade. So we'll see what happens. Google. All right, Google. I did take back here on April 8th when we had the 5 cross over the 20. This is a different crossover system, but same thing. If you're wrong, you can get out fairly quickly with a small loss. If you're right, you can have a nice possible outsized gain. I did buy it here at 1206.49. Right now we're at 1263. So about 57 points to the upside. This has been nice. I've been phasing out. I did take half of my position off here when we rejected the 200-day. Then we moved sideways. We were up a bit on Friday and then reversed back. I'll tell you what I'm going to do on this particular trade, though. I don't like that we are now making a lower low, closing right now below the low of Friday's low. I don't like that we've rejected the 200-day twice. So if this closes below Friday's low, I'm going to go ahead and just lock in profits on this. And this one's been a good trade, but I don't like how it's responding around the 200-day. Looks like we have the death cross, meaning the 50 is crossing below, let's see, 1272. Yeah, the 50 is crossing below the 200, which is defined as the death cross, but I will hold it as long as it holds above Friday's low. But if it closes below, I'm going to go ahead and just lock in profits. Okay, the world famous SPY trade. So I do buy the SPY every day at the end of the day. I hold it overnight or hold it through the weekend. I sell it first thing the next morning. In case we have some new viewers, I want them to understand why I do this. But this is a back-tested study from Liz Ann Saunders. This has nothing to do with ATR channels or moving averages or RSIs. This is the straight buy at the close, take the risk, hold overnight, sell first thing the next morning. So Liz Ann Saunders at Bespoke Invest. This approach here, 2 different approaches, tested every day since 1993. First approach, buy the SPY at the open in the morning, hold it through the day, sell it at the close. If you use this approach every day since 1993, you'd have returned a negative 13.9%. However, if you did the opposite, which is what I do, buy the SPY at the close, hold overnight, sell the first thing the next morning, you'd have returned 634.2%. Past performance is no guarantee of future results. That is true, and that goes for any trading approach. But if I'm going to allocate money towards something, I'd rather allocate it towards something that has a good back-tested history or good back-tested results. The blue line is the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. You can see the blue line is the clear winner. It has had an edge since 1993, far exceeding what the opposite is, but there are drawdowns. This is kind of like riding a bucking bronco, right? It goes up, it goes down. 2019 was a very profitable year. This year has not been profitable, but you can see if you just look at the history, you'll see that sometimes it's up, sometimes it's down, but it's the long-term view that we want to take where the long-term approach has been positive. I am position sizing very conservatively here, only a quarter position size because of the increased volatility, and we are under the 200-day. So with that being said, I did buy the SPY at 286.64 on Friday and had to sell this morning for a loss at 282.60. So did have to take my lumps over the weekend on this, but you know, I'm just so used to trading this. You never know what it's going to do. You're just playing for the long term. So I will buy this again. We are under the 200-day, so I will only buy a half a position, and volatility is still high. So I will also take half of that. So I will only take a 2.5% position size, 2.5% of my capital. So if I had $100,000, I'd only be buying $2,500 of this. And that's the key with this approach is you're going to have drawdowns like as with any trading approach. So you need to make sure that your position size is conservative enough so that it does not amplify your emotions where you're going to quit. And I'll tell you, it's a good example of this back here during the apocalypse. Man, I got hammered. As a matter of fact, I did even skip one day. I feel bad, feel shame. I did skip one day because it was so gnarly. But The good news is I did not give up on the approach. Could you imagine if I would have given up on the approach right about here? And you can see the last couple months, or yeah, I guess about a couple months, has made back a lot of the losses. So I'm glad I continued with it. So I will be buying this at the end of the day. And then oil. My gosh. Look at this, everybody. It's embarrassing. This is on the 5-minute chart. I did buy oil here at 384. We were moving sideways, nice consolidation in the value zone. I had a V2 entry. Here's day 1, day 2, day 3. Day 2 washed out day 1, day 3 closed above day 1's close. I bought it here at 384. It went rocketing up, but my plan with this trade was, because I like the possibility of an end of day trade on oil. As it started to move my way, I said, okay, listen, I'm going to hold this trade. If it closes over 30 on the daily, I'm going to keep this as a regular normal trade, not an intraday trade. So here, everything was looking great. It was up about 5%. Woohoo, right? in just a little over a half an hour. It was fantastic. I came back. I was like, oh no. So what I did was, when it got back to my break even point, I just went ahead and to sell. It's one thing to have a huge gain, and normally I would have locked some of this in, but I decided to switch it over to an end of day trade. And it came right back. The worst thing you can do though is have a great gain and then let it turn into a loss. So I wasn't going to have that. So I did get out exactly even, but I had almost a 5% gain in this. But let that be a lesson, that if you do have a really great trade and it goes up a ton and it comes back to break even, don't let it turn into a loss. That's just insult to injury, right? I mean, there's a lot of different places I could have taken profits on this if I just was going to keep it as a day trade, specifically this bar here with the close below the previous day's low. But again, my plan was, as long as it stayed above the 30 RSI, I was going to go ahead and keep this trade. And, it's important to have a plan for your trade and try not to switch in the middle of the trade. Try to, work that plan out and stick with that plan, win or lose. But that was my plan. But I did override it a little bit. I was like, you know what? It gets back to break even. There is no way I am going to let this huge gain turn into a loss. So anyway, I thought it was a good example. After that, it went down. I was glad I got out. Then I went up. I was like, nah. Anyway, but now it's still below where so all of that, good teaching lesson, completely break even. I'll tell you one thing though, I am eyeing this for an end of the day trade. Here we have a low, we have a rally. Now we've made a lower low, but you can see this first move down here had huge down momentum bars. Then we rallied to green. Now we are lower than this previous low, but there's not even any green to be found. This is called the double bottom with a bullish divergence. The way that I look at this is I look at this as a positive bullish trade, but I would have to have a signal, and the signal is under 30 over 30. Well, it did go under 30 earlier, so if this closes above 30, I will go ahead and buy it. I'll buy a very small position. The other day we talked about using an ATR of 2 ATRs when things were very volatile. So I will position size using a 97-cent stop. 97 cents down here is approximately 25% stop to keep me outside of noise. Of course, I would take whatever I am risking on a trade. Let's say I was risking $1,000 on a trade. I divide 97 cents into that, and let's just see what happens. So give you a good example here. So if I'm risking $1,000 divided by 0.97, it would tell me to buy 1,030 shares. Now, if I was using a 10% position size without factoring in volatility, I had $100,000, I'd use 10% divided by 377, 2652 compared to 1,030. So what this does, this 2 ATR reduces my position size less, much less than just using a straight 10%, because a 10% doesn't really mean anything on this right now. That could just be a regular day. So I hope that makes sense. So I will be looking this at the end of the day. Okay, let's get over to current positions for everyone in the group. Steve Burns. Steve Burns did buy the Qs when we had the 520 crossover. Good back tested approach for the Qs. He bought it at 196.30. Has moved up beautifully. Very nice trade, Steve. Down a bit today, but still very nice profitable trade. Monster. Steve also bought Monster when we had the 520 crossover right here, I think at about 60.20 or roughly. Went down, had a huge day up. Now it's kind of come back down, moved sideways. Today it's down a bit as well, but still up on the trade, so that's nice. Google. Steve and I both have Google here. Mine was with the 520. His is with the 1030. Bought it here at 159 when the 10 crossed over the 30. It's about break even on this trade at the moment. Big winner of the day is Bing He. Oh no. I was just going to go over Bing He's trade. Hi, Greg. Took profit too early on EVBG at market open. Anyway, grateful for that. Okay. Well, still, you still had a good trade on EVBG. But yeah, it took it a little soon. But anyway, still a profitable trade. Congratulations, Bing He. Okay, we have oil. Jerry, I don't know if Jerry is here today, but Jerry did take oil a couple days ago back here at 428. So it's down pretty substantially since there. So I don't know if Jerry got out of the trade or had to stop, but hopefully he did. If you're around, Jerry, let me know. TLT, Bing He, did buy TLT back here on 417. Up a little bit today. Looks like he's just about break even on the trade. And then lastly, Apple. Steve Burns did buy Apple with the 1050 EMA crossover. That is a good back tested approach on Apple. Bought it here around 283, somewhere in there. Down today, 1.62%, down to 278. So anyway, all in all, kind of a down day today. Kind of hard to have big profits on a down day today like this. But hey, at least Adobe was up. We gotta be grateful for that. Hey, Quad Racer is here. Good to see you, Quad. Thank you for coming by. Mount Toji, hey everyone, hope all is well. Frank, oh, we have a poem from Frank. Trading is a garden of stocks and plans and needs. It also means pulling out the weeds. We tend our crops and place our stops and wait for what's to be. You see, trading is a garden and it's you that plants the seeds. Wow, good stuff, Frank. Let me take another shot at that. Trading is a garden of stocks and plans and needs. It also means pulling out the weeds. We tend our crops and place our stops and wait for what's to be. You see, trading is a garden and it's you that plants the seeds. You know, that's great, Frank, because, you know, I always kind of use the analogy of, you know, your portfolio is your garden, just like you say, it's your garden, but it's your job as the gardener to let the plants grow, meaning your winners, right? Let your vegetables or whatever or flowers grow. Let them grow and blossom, but you have to get rid of the weeds. And in this example, the weeds are your stock or your losses. That's why, you know, it's a perfect example of getting rid of your losses quickly and letting your winners grow. So perfect, absolute perfect poem. Mount Doji says, is GME too far out of the value zone? Yeah, for sure. I mean, we're at like the 2.5 ATR, at least for me, Mount Doji, right? This is just for me. Doesn't mean that, if you like it, you can't take it. It's a beautiful V2. It's just, again, it's going back to what I was talking about as far as my filters. I know 92% of prices are likely to fail at the third ATR channel. And so we're pretty close to that third ATR channel. And so, if it holds on to those statistics and stops there, then the risk, down to here, and there's less risk to the upside than the downside. But that's just how I look at it. That's just my opinion. Glenn says, hey, Greg, what's happening with oil? It's insane. It's insane, Glenn. What is happening? I mean, it's hard for me to believe oil is not going to go up. Well, I mean, I'm sure it is, just based upon the contango of what's happening here, but it's insane. John says, I see shop short interest rising, another Tesla type squeeze. Oh, I haven't looked at shop forever. Whoa. Wow. Yeah, that's tough if you get caught in a short squeeze in that, isn't it? Good to see you, John. Glenn says, QQQ long, IWM short is still doing well. Oh, that's right. Glenn is buying the strongest, which is the Qs, and he is shorting. Let's take a look at this. So the Qs are down 0.57%. Russell down 1.9, so 2-1. So he's lost a little on the Qs, but made more than that shorting IWM. And that's really how hedge funds came into be, is using that exact same practice. Christopher Hitchett, hey, good to see you. Hope you're having a nice evening, my friend, over there in Leeds in the UK. Okay, so listen, before we go down through my watch list, before we look for the 3 requirements, right, that I need every day in order to even think about placing a trade. First one, make sure there's a good confluence or combination of indicators lining up, at least on one time frame, ideally on 2 time frames. Step number 2, make sure there is a good risk reward, right? Can have a good setup, but it doesn't mean that I can always take the trade. I can have a good confluence, but I have to look at the risk reward. And number 3, I have to make sure that I keep correlation and account heat in mind before I take that trade, right? So, but before we go down and do that, there's some really good Twitter channels out there, some really good Facebook channels out there. They spend a lot of time and effort posting good trading words of wisdom for us, and we really should read them. And we shouldn't just read them, we should internalize them. But one of my favorites is Lone Stock Trader on Twitter. Excellent channel. He's at Lone Stock Trader. And let's see what Lone Stock Trader has to say. Countless times I relied on my judgment to exit a trade in the past when the general market looked weak, in quotes. But my stats always showed me that I'm better off just letting my stop loss and trailing stop do all the worrying and decision making. I chose better returns over my ego. And man, this is so true. It's so highly underrated to just let your stop loss and trailing stops making the decisions for you. Otherwise, if you don't have a construct or structure in your trade to let you know when to get out to the downside, every day, every tick, you're like, oh, maybe I should get out. Oh, wait, no, this looks weak. Exactly what Lone Stock Trader is talking about. So, it's a blessing to be able to just have a plan that you can stick with, and you have a plan to get out. So that way you just don't have to always, clutch your hands and clutch your pearls. Should I get out? Should I not get out? Should I, just let your stop loss tell you whether that's a close below the previous day's low, or it's a rejection of the 70 RSI, or it's a rejection of a major moving average above you. And sometimes, your stop loss is going to hit and you are going to get out. It's going to go zooming on up. Well, welcome to trading. That's just how it is. But, like he said, when he analyzed his profit and loss, if he would have just let his stop loss do the trailing instead of just his impulsive getting out, he would have had much better returns. So I choose better returns over my ego. So thank you so much, Lone Stock Trader. Appreciate that. And if you haven't checked out his channel, please do on Twitter. I think you'll be happy. It's a wonderful channel. Mount Doji says, I would like to hear your thoughts on Lyft. Well, we did come back into the value zone. We did trigger a V2 on Friday, although not a legitimate one, at least the way that I look at it, because we had a gap. We came into the value zone, yes, but we didn't have any sidewards motion. We had a gap and too high in the value zone, really, especially with rejecting that 1 ATR channel. So me personally, I would not be interested in this here. Let's look at the weekly. You know, we've went way down. We've rallied back up. There's probably going to be some resistance here at the 10-week moving average and the -1 ATR channel on the weekly. But listen, doesn't mean it can't continue to go up, right? It's just, again, old Grandpa Gossett over here with all of his rules. But, you know, I have rules and sometimes they work for me, sometimes they don't. But just like I was reading from Lone Stock Trader, you know, it takes a lot of the emotion and worrying about it because, yeah, I mean, this thing could go up and hit the 50-day moving average, no problem. I mean, it's up on a big down day. That is positive for sure, right? But just the structure that I need for a trade, it came into the value zone. That is good, better than buying up here, right? Came back into the value zone, did trigger a V2, but there's a gap. There's no sideways motion. You know, these kind of trades, a lot of times I see will make a lower high and then go back down. But who knows, right? If I only knew just one day. All right, let's see how things. So we're down 500. All right, well, let's get going down through, see if anything looks interesting. Apple down today. You know, what I would be looking for on Apple is a pullback into the value zone. Even maybe a pullback to the 200 would be excellent. We have a lot of tech earnings coming up, so, you know, if they're bad, we could get down here. If they're good, well, I just won't be in them, right? That's all there is to it. But that's the, you know, that's the thing with earnings. But a little high up here, you know, a little high near the 3rd ATR channel. You can see for a couple days it tried to get above that level, just didn't like it. So pull back into value. If it could dovetail with the 200-day moving average, that'd be excellent. Adobe I have. That one's positive today, which is nice. I like that we did get a V1 here. I didn't take it based on the V1. I took it based upon the 1050 crossover. But anytime you're in a trade and you get a V1, it's always a good thing. Amazon is up today, up near that 6th ATR channel. You know, it's tough to get prices to go above the 6 ATR channel. It is very, very tough sometimes. So we have earnings coming up. You know, I would need to pull back into the value zone. I don't know if it'll ever get here. It may not, but it might. But that's my plan for Amazon. Boeing, ooh, yep. Boy, I took this V1 here. I like this higher low V1, and the next day, boom, had to get right out for a loss. And then insult to injury, the next day, boom, way up, and then down today. So I don't see anything on Boeing today. Berkshire Hathaway, you know, held above the 1 ATR channel for a while. I'd like to see it revert back to the mean. The mean would be halfway or back here in the value zone. We are slightly in the value zone, but I'd need it to get in the value zone, stop going down, and look for a false breakout to the downside, or in other words, a V1 or a V2. Beyond Meat, nice strong bar up today, did test that previous high. Kind of a lot of confluences going on there of rejecting that high, getting near the 3rd ATR channel. So for me, Beyond Meat, pull back into the value zone. Caterpillar came into the value zone, held for one day, went down, kind of held. This is, I would have liked to have bought it in this area, but I didn't quite get the signal. I guess this is a V1, but not a very good one because it didn't wash out that first day's bar very well. But anyway, I don't see anything on Caterpillar. Carnival Cruise Line. I do have some calls on Carnival Cruise Line, not for me, but an account I managed, and we bought it down in here. So the calls are doing very well. But look at the sideways movement here, just sideways, 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 sideways. I would, if we could get a stab to the downside and reversal back up, giving us a nice higher low V1 or a V2, that's what I'd be looking for, but I don't see anything there yet. The Dow, like a lot of times had some issues up here with the third ATR channel. We have the 50-day moving average above, so pull back into value is what I'd be looking for. Walt Disney just been moving sideways for over a week, just up and down and up and down and up and down and down. Now we're down into the value zone. If we could creep down into the value zone a little bit lower, get some sideways movement, get one day that tries to go down but reverses back up, give me a nice V1 or a V2. Etsy is so strong, I can hardly believe it. I mean, Etsy has these runs sometimes on Etsy are amazing. I mean, look at this freaking run. No reason to get out no reason at all, not closing below previous day's low. This might be a bit of a climax bar here. We're above 70 RSI. We're getting near the third ATR channel or the 6th ATR channel, but nothing there. Facebook is down a little bit today. Look for a pullback into the value zone is what I'd be looking for. Gold up a little bit today, but with gold again, I don't want to buy up here. I want to wait for it to pull back into value. So that's what I'm looking for. Google, I am going to get out today on this. I used the crossover trade to get me in. I just don't like the stalling out here. I don't like the close below the previous day's low. So if it closes below 1266, I'll get out. Goldman Sachs just got up here high, just been moving sideways, rejected the 50-day moving average, pull back into value, V1, V2 would be nice. We had a good trade, or I had a good trade on Goldman here when I had a higher low V1 bullish reversal, bearish bullish engulfing, and had about a 10% move up to here. So that was a nice trade, but I don't see anything there. Home Depot down today, same with a lot. I just want to pull back into value. IBB, Steve had a really nice trade on IBB with the 530 crossover. I think he got out Friday, if I'm correct. So up a little bit more here today, but getting up to these levels doesn't offer a great risk to reward. So that probably looked like it was a good place to get out for Steve. Intel, pull back into the value zone is what I would be looking for. IWM, of course, we just talked about that with Glenn. Johnson & Johnson, very strong. I mean, look at this move. I mean, this is like stairway just up to the sky, right? But I would need some kind of pullback. How are we doing on time? CarMax, down a skosh today. Looks like we've made a lower high. I'd like to see it come back into the value zone, wash out this previous low, get a V1 or a V2 setup. Coca-Cola, boy, look at this sideways motion, everyone. You hear me talk about sideways motion with tight bars like this tends to break strongly one way or the other. Just don't know which way it's going to break or when it's going to break, but these sideways bars generally will turn into some kind of strong movement one way or the other. Lockheed Martin got up to the third ATR channel, and that was it. MasterCard back in the value zone at least. Again, right? Better than buying up here. Wait for it to go back into the value zone. Now I just need some kind of V1 or V2 trigger. McDonald's, pull back into the value zone. Merck, really washed out the 200-day moving average and closed above, but still just up at these levels. My filters do not allow me to take trades up here. Still wouldn't be a bad risk to reward technically, because if you had a close below the 200, you could just quickly get out. But again, my rules just kind of forbid me to buying this high. And listen, buying high sometimes leads to higher prices. There's no doubt about it, but just my rules. Microsoft Down a bit today. Looks like it's going to close under the third ATR channel. Netflix up today, another 3.5%. Looks like it might close above the third ATR channel. That is very positive. We have earnings tomorrow, so I can't get involved there. Nike, just a lot of sideways movement, really. Philip Morris, look at this higher range, just moving sideways, 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 sideways. Could easily break above the 200-day moving average, no doubt about that, but just too high for me. PayPal, strong, rejected the third ATR channel, can't buy that high. Q's down, might close under the third ATR channel, who knows. Silver up a bit today. S&P had the overnight loss, over the weekend loss. I will be buying that again at the close. Teladoc, very strong today, up 5%. My gosh, looks like it's broken out from this previous high, but again, it's too high for me to buy up here, especially up at that second ATR channel and close to a 70 RSI. Looks like Bing He went slightly positive on his TLT, his bond trade. So congratulations, Bing He. If you have any changes, let me know. Tesla down just a bit. Twitter. Well, good relative strength today. We did make a lower high. If I make a lower high before I can take another V1 or V2, I'd have to wash out this low. This is a pretty nice looking V1 here, but it looks like it rejected the 50-day already, so I'm going to pass on that. United Airlines. Boy, you know, we have earnings coming up, but looking for a higher low V1 or V2 here. This looks about perfect. We close below the 1 ATR channel. We rally into the value zone. We come back down, looking for a higher low V1 or V2, but dang it, then we have earnings, so I don't see anything there today. Natural gas doing extremely well today. My gosh. I don't know how that works vis-a-vis oil, but that's incredible. UNH, nice move up. Just would like to see a nice gradual, normal move back into the value zone to buy that first dip. Oil, well, I don't know if I'm going to get oil today. Let me get rid of this. If it closes over 30, I will take the oil trade. If it closes over 30, but right now it's under. So that's the one to watch for me. VIX, oof, 10% up today. My gosh. Verizon, just making this higher base up here. Walgreens. Here was a higher low V2. I think we talked about this, but I didn't like this because day one's bar was too big. We had a gap on the V2, and then it dumped today. Walmart's been strong. Finally got some resistance there at the third ATR channel. Remember, everybody, that third ATR channel, that's a tough road to get over, and you can see right there it stopped. Energy down today, but not that bad. Financials down, real estate down, back in the value zone. Utilities, nope. Healthcare, very strong. Look for a pullback. And Zoom up slightly. So listen, I don't see anything here today at all unless oil closes above 30, which right now it does not look like it's going to. So anyway, I hope Jerry got out of oil. And I'm glad I got out of oil when I was supposed to after that break-even trade. So Adobe may go negative, but anyway, Adobe's fine. Apple are the calls. Looks very likely I will be getting out of Google today with and just locking in profits there. SPY, gonna grab that overnight SPY trade. And oil, I'll just have to watch and see if it closes over 30. If it does, then I will buy it. If not, I will not buy it. So that's the plan. All right. Anybody else looking at any potential trades today, making any changes to any of their trades? Please let me know if you are. And we'll update things here. Yeah, it doesn't look like oil's going to close. I was hoping that that 30 RSI was going to hold that, but who knows? We'll see at the last moment here. But it looks like we're accelerating our downtrend. Let me take a look here. Okay. John says, have you heard from... No, I have not. I have not heard from him. You know, I know he traded a lot of energy, and, you know, he was long and short, so I don't know. I don't know what happened to Murray. I hope he made a lot of money to the downside and he's just retiring on an island in Australia. I hope that's the case. Steve says QLD is trying to hold a 1050 crossover. Let's see. Do I have QLD on here? Yes, I do. Oh, this is the double. Is this double leveraged or triple leveraged? I think it's double leveraged. This is a good back-tested approach on QLD, which is the double leverage Qs. Let's see, 104.52 compared to 104.62. So it looks like it is not going to cross over here. I couldn't buy this one myself because it's above the second ATR channel. But if it holds and anybody takes that, Steve, let me know. Steve says QLD looks like it's failing. Yeah, that's what it looks like to me as well. Okay. So on deck for me is I'm going to go ahead and lock in that Google trade with a close under. Doesn't look like oil is going to close over, at least not right now, but I guess I better get that queued up, but I have about 6 minutes. Hey guys, give me 1 second. I'm sorry, real quick. Katie is staring at me with her mind power and I'm not going to be able to concentrate. Let me let her out real quick. Okay, sorry about that. I'll tell you, when she sits there and stares at me, I mean, there's some kind of strange power that I can feel it. I don't even have to look. I know she's looking at me. There's no way if I didn't let her out. Okay. So oil doesn't look like it's going to do it. Google's going to be very close to holding. Well, so far Google is a hold now. Zach says, Google trying to make a last minute push. Yes, it is. Yep. Glenn says, more smoking cannabis over the last few weeks. Thoughts on CRFL? Let's see. Let's see if I can even pull this one up, Glenn. CRLBF. Yeah, I can't look at that one. It's not in my charts, Glenn. So apologize about that. Is there another other pot stock that you know the okay. TCNNF. No, I don't have that one either. Those are probably pink sheet stocks. Is there a symbol for large tobacco or marijuana, like a big one that's listed? EVBG. To be honest with you, I don't think I would have gotten out on Friday's pattern. I mean, look, it was just moving up nicely, making higher highs, closed above the 1 ATR channel. Honestly, if I would have had that trade, I would not have gotten out, because it just kept making higher highs. It wasn't near the 3rd ATR channel. It wasn't near the 70 RSI. So no, I would not have gotten out. And when I saw this today, I was almost certain that you would have stayed in. But hey, you did what you did, and you still had a profitable trade. Tilray. Well, it's definitely consolidating, closing back in the value zone. Not really a V1 or a V2. Okay, sorry, I'm going to have to pay attention here and probably get rid of my Google. Ooh, how we doing on time? All right. So now it's coming down to possibility of USO closing above 30. Let's see. There it is. Is it going to hold? This is going to be anybody's guess. No. No, I didn't buy it. I didn't buy it because it closed under 30. So we'll see whether that was a good idea or not. So I did buy the SPY at $281.59. Bump. All right, there we go. So I did take Google off the board with the close below. Nice trade though, all in all. About 4.5%, something like that. But again, I took half here when we rejected the 200-day, and I took the other half off today because we rejected the 200-day moving average. We closed below the previous day's low. We rejected the 50-day moving average. So, kind of a lot of red flags there. So I did lock profit in on Goog. And USO, I'm just going to take that one off. That did not close above 30, so that one is off. So I am down to 3 positions now. Adobe, which is doing fine. Apple, long-term calls, and the overnight SPY trade, and that's about it. Did anybody else make any changes at all in their positions that you'd like me to update? If so, please let me know. Oh, CGC. Yeah, good idea. Yeah, up today, but the rejection of the 50-day moving average, rejection of the 50 EMA, just back into the range. I think this is kind of range bound, but it tried, like Pedro said, it tried going up today, but it rejected the 50-day, 50 EMA, one ATR channel, rejected the previous high. So all in all, that's pretty bearish, but it was up a little bit, so that's good. So listen, if you have any comments, questions, if you'd like any clarification on anything I discussed today, please just let me know. If you'd like me to take a look at any stock symbols, please let me know. Before I do that, I just want to hurry and put in my quick daily plug and just let everybody know that I do offer private one-on-one coaching and teaching lessons in the evening time via Skype. I have been trading for 24 years. As a full-time trader. I like to teach. I love to teach, actually. I like to meet, have new students and meet with my students. And, I do have a course. It's 5 sessions. Each session is about 3 hours. So it's about a 15-hour course. It's just you and I. And, it's very intensive. I teach you everything I've learned over the last 24 years with my experience, all the things that I've learned from all my great teachers and mentors like Stephen Burns and Dr. Alexander Elder and Kerry Lavorne and Larry Williams. And it's a good course. I really think it's a good course. It is $1,000, but I think it's worth every penny just because of all the personalized attention. And it's really important to me that my students do well. I do try my very best with every single student so that when they're done with me, they can look at the markets and have an approach they can use in any market. And, during the lessons, the format is the first half of the lesson, I'll teach the lesson what we're working on. And then the second part of the lesson, I have you teach it back to me. We look at a lot of examples. I have you break down the charts. We go through a ton of charts. We do a lot of chart study. And, I say, look, what's our next trade here? Is it a good risk to reward ratio? Where's our profit targets? Where's our stops? All the kind of stuff that you need to really create a plan. And you need a plan, right? So, and I know if you take my course and you get done with it, you will have the tools you need to put together a plan. And, so it's good stuff. I really do think it's good stuff. So before, I work with a new student, I like to have a Skype call with them just to get to know them a little bit better, just to learn more about them and their trading and their challenges and their goals. Then it's a good time for them to ask me about the course and what it entails. If they have any questions about me, I'm happy to answer. The call is totally free and there's no pressure on my end. I can assure you that. I don't like when anybody puts pressure on me. So it's really just a get to know you call, just to see, to answer your questions and to see if we're a good fit. So if that's of interest, please reach out to me. I do have quite a lot of students at the moment, but I think I have some openings next week. But email me. My email is in the description of this video, and you can also send me a message on Twitter. But we just set up the Skype call. Say hello to each other. You can ask your questions, and then if you feel like I'm the right fit for you, you can just let me know. So that's that. And then also, if you like today's channel, or if you like today's podcast or live stream, whatever we're calling it, if you could hit the thumbs up button, it really does help build the channel. And there's a lot of people out there that need some good guidance or somebody to teach them some good trading principles. And I think if we could get them here, they would learn that. So if you could hit the thumbs up button before you get out of here, I would really, really appreciate it. So thanks for that. Kamal says, thank you, Greg. Thank you, Kamal. Appreciate it. I do have a lesson tonight with Kyle in South Africa. I am looking forward to that. He has really been motivated to get these lessons done, and he's working really hard to learn. And so looking forward to that, Kyle, if you're out there listening or you listen to that later. I will speak to you tonight at 9 p.m. my time, 5 a.m. his time. He has to wake up because of the time difference. He's waking up 5 for lessons. So look forward to that. All right, so doesn't look like I see any changes here from anybody on any trades except for being he who got rid of that one. Let's take a look. Pedro says, thank you, Greg and team. See you all tomorrow. Thank you, Pedro. Appreciate you coming. Pedro, if you're still around, where are you from? Where are you from, Pedro? I think I know where most people are from, but with Pedro, I have no idea. All right, let me come over here. And by the way, I did do an interview with Dave Lincoln. And I am going to be posting that when that comes out. So I think that was kind of a fun, interview. So I'll definitely post that. And I'm actually going to be interviewing him on this channel. He's an expert with the VIX. And interesting, right? I mean, that's really what he concentrates on is the VIX, and interesting stuff. I've learned a lot from him. So we're going to have him on. And, oh, sorry. And let's take a look here. Yeah, Famous Dave's, F-A-M-I-S, Dave. Famous Dave on YouTube. So, but I'll share that with you when we have it all ready and I have him on. Oh, Pedro is Portuguese. He lives in Norway. Ah, that's where Murat was from. Thank you for letting me know, and thank you for spending your evening with us, Pedro. Zach says, I'm heading out, Greg. Have a good afternoon. Thank you, Zach. Appreciate that, my friend. All right, well, what a day. What a day with oil. What a day with the markets. Unbelievable, man. Unbelievable. All right. Well, listen, if nobody has any other questions, I'm going to get out of here, go for a little hike, grab something to eat, get ready for my lessons later tonight. So that's my plan. And Katie is all for my plan if it involves her and walking. All right. Well, it looks like that's it. Thank you so much, everybody. Hope you have a nice day. Please remember to go out and do something nice for somebody today. Just say hi, a wave from a distance, right? Or just give somebody a call, just see how they're doing, check in with them. I think they would really appreciate it, and they'd appreciate knowing that you were thinking of them just to check on them, right? Especially in the situation that we have this in these days. So anyway, thanks, Miko. You enjoy the rest of your day as well. So take care, everybody. And Miko, I will speak to you on Thursday. We have our next lesson on Thursday, so look forward to that. So have a good day, everybody. Okay, go out, do something nice for somebody. Take care. See you hopefully tomorrow, right, during the last hour of the market. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.